Hi everybody, it's Canadian Finance Guy here. Just wanted to touch on some of the investing accounts we have available to us in Canada. Today we'll be looking at the tax-free savings account, which is specifically the TFSA. If you're from the US, your counterpart would be the Roth IRA. So let's go and look at some aspects of this account. So the tax-free savings account, it's called a savings account. It isn't meant for savings. It's a little misleading. If we scroll down, we can see this account was started in 2009, and you can hold any combination of, eligible investments in this account, such as cash, stocks, bonds, GICs, mutual funds, and it is a registered account, meaning that you get some specific tax benefits with this account. Any interest, dividends, capital gains earned in this account are tax-free for life. So when you withdraw them, your total account value will be what you get. There's no tax on the dividends, interest, capital gains. Let's go and look at a specific sample of that. So I have a tax-free savings account. It's held here with Wealthsimple. It's at $39,000. Scroll down, we can see it's about 2% of all time. Let's go and look at the total gains on here. So all of these gains I have in these companies, when I decide to sell out of them, that capital appreciation will be mine. I don't have to pay the CRA any portion of this, which is awesome. And now let's go and look at the dividends. We did talk about the dividends. We filter and let's look at the dividends. So these dividends that are received here, as you can see from Royal Bank, were tax-free for $8.78. However, a lot of people don't know that the dividends received, within this account from US companies are actually taxed. They're taxed at 15%. It's called the withholding tax. But I don't ever see that tax. It was withheld before I got this dividend. So this Apple dividend, this Texas Instrument dividend that I got, that is completely already had the tax taken off. I don't have to fill out a separate form or do anything like that or have taxes payable at the end of the year. That is just gone. So I got a comment, saying that 15%, doesn't that deter you from investing into some of these companies in the US? For me, I don't think that 15% is large enough for me not to want to invest in these great companies. The US stock market is the largest stock market in the world with some of the greatest companies. And I think that the capital appreciation of these companies over time and the power of their dividend compounding will far outweigh the 15% tax or withholding tax that I pay on the dividends right now. So let's go back and look at some other aspects of the tax-free savings account. So how much money can you contribute? To open a tax-free savings account, you have to be 18 years old. And from that time, you start accruing available contribution limits. So if you were 18 years old, earlier back in when they opened the account in 2009, we can look at the different contribution limits. So from 2009 to 2012, the annual maximum contribution limit was $5,000. Then it went up to $5,500 from 2013 to 2014. It was $10,000 for 2015, $5,500 for 2016 to 2018, $6,000 for 2019 and 2020. 2021 was $6,000, and 2022 they just announced was another $6,000. So like I said, you have to be 18 years old to open up this tax-free savings account. Let's go and look at if I had, for me specifically, how much I would have been able to contribute to this account. So I was born in 1989. So if I contributed nothing so far to my tax-free savings account since 2009, I could have contributed a total of $81,500. So I encourage you to play with this calculator, see how much you're eligible to contribute to this account. And you can always go to your My CRA login and log into your CRA account and see how much you're eligible to contribute per your last tax assessment. So let's go back and look at my tax-free savings account. Like I said, I have a bunch of securities in here. I am very bullish on these securities, and I plan to use this as a source of income when I retire. And I'll be making withdrawals. So I won't be making withdrawals till later, but one important aspect you need to know about making withdrawals with the TFSA is when you make that withdrawal, your contribution room isn't added back until the following January. So if I made a withdrawal in November of this year, I don't get that contribution room back. That amount of that withdrawal will then be added back to my January, next year's portion, and I can contribute all of that back. Let's say, I had a big expense that I thought I was going to buy a car for $20,000 or took $20,000 out, but I didn't end up buying that car. I could put all of that back in January of the next year. So just thought I'd share that, you're welcome to take a look at my portfolio. I have it posted on my channel, and that's the tax-free savings account in a nutshell. hopefully that helped. And thank you guys. I hope you have a great day. Bye.